Today in crypto. El Salvador's digital Bitcoin wallet Chivo removed a pricing feature that allowed users to make quick profits on trades. The Latin American nation's Chivo wallet had planned to remove a feature that freezes Bitcoin's price for 1 minute before confirming a trade. The feature allows users to check pricing on other cryptocurrency exchanges and decide whether to buy or sell, a phenomenon known as scalping. Chivo said on Twitter, "Unfortunately, many of our users used it for scalping, which is legal, but without the option of having a frozen price. Doing it with a frozen price, comparing it with other exchanges in real time is a type of fraud." Chivo wallet sparked an avalanche of day trading last month as citizens of El Salvador bought dips and sold rallies as it became the world's first country to adopt Bitcoin officially. El Salvador's central bank chief Douglas Rodriguez expects Bitcoin to lose its reputation as a speculative asset and be helpful as a legitimate payment system. While Chivo users said they have noticed a series of new limits and costs on trading Bitcoin through the medium. The wallet is now restricting trades to one every 3 minutes, users say, and they assert that the price at which they sell the cryptocurrency is not the price they receive when the transaction is approved. In June, El Salvador became the first country in the world to adopt Bitcoin as legal tender after Congress approved President Nayib Bukel's proposal to embrace cryptocurrency. Supporters of cryptocurrency hailed the move as legitimizing the emerging asset. The country relies heavily on remittance from citizens working in overseas countries. Data from the World Bank showed that the country's remittances made up nearly $6 billion or around a fifth of GDP in 2019. One of the highest ratios in the world. The cryptocurrency offers, in theory, a quick and cheap way to send money across borders without relying on remittance firms typically used for such transactions. Recently, Bitcoin soared to a record of almost $67,000 on Wednesday following the debut of a US ETF tied to the cryptocurrency. It has since declined, dipping below $60,000 over the weekend before regaining some ground. On Monday, October 25, payment giant Mastercard announced cooperation with U.S. institutional Exchange Bakkt to expand integrated cryptocurrency solutions and payment services. The announcement stated that this cooperation would accelerate consumers' access to the digital asset ecosystem. Consumers will be allowed to buy, sell and hold digital assets on the custodial wallet platform supported by Bakkt to meet the growing demand for encryption, payment, and reward flexibility. For Mastercard, it can also further simplify the issuance of branded encrypted debit and credit cards. In addition to the first time, this cooperation will help Mastercard integrate encryption technology into its loyalty solution, allowing Mastercard holders to use cryptocurrency to earn and spend rewards and use cryptocurrencies for payment interchangeability. Shirley Haymond, executive vice president from Mastercard, said, "Together with Bakkt and grounded by our principled approach to innovation, we'll not only empower our partners to offer a dynamic mix of digital assets options, but also deliver differentiated and relevant consumer experiences." On September 10, the payment platform announced the acquisition of CipherTrace by offering businesses powerful intelligence about the crypto economy as digital assets continue becoming more intertwined with daily activities. In June earlier, U.S. institutional Exchange Bakkt launched a new virtual Visa debit card named Bakkt Card for retail purchases in terms of crypto transactions. Blockchain.news reported on October 19, shares of Bakkt Holdings Incorporated started trading on the New York Stock Exchange, NYSE, Monday under the ticker symbol BKKT. Cryptocurrency exchange Okcoin has reported the number of and trading volume of institutions surged significantly in the last year, driven largely by stablecoins and tokens and decentralized finance. In a report released on October 26, Okcoin said it had seen a 450% increase in the number of institutional customers on its platform between September 2020 and September 2021. As well as a 124% increase in institutional trading volume over the same period. According to the report, 53% of the purchases institutional investors made in September were for altcoins. In addition, the customers showed a greater appetite for non-Bitcoin crypto assets compared to previous years. Continue reading on Cointelegraph. The past few years, dating back to 2017, have seen a surge in the number of active blockchains in the decentralized finance (DeFi) market. During this time, we have also witnessed the launch of Cardano and Polkadot, both of which have proven highly popular among developers, investors, and end users alike. There has been a long-standing debate about which of the two blockchains is more future-proof, or whether the underlying technology they possess is solid enough to be capable of ensuring a sustainable future. As much as this remains a debatable topic among blockchain enthusiasts, this article will take a deep dive into both blockchains in order to highlight some of the strengths and weaknesses of both. To achieve this, it will primarily examine three major metrics across both blockchains. First, the technology behind both blockchains and consensus mechanisms. Secondly, the systems of governance, and, finally, token performances in the market. Technology. Starting with the earliest entrant in the blockchain industry, Cardano is a third-generation proof-of-stake (POS) blockchain platform that is aiming to be a more efficient alternative to proof-of-work (POW) networks. Similarly, Polkadot has also been built as a proof-of-stake protocol with the primary aim of delivering interoperability among blockchains. To explain further, it is designed to connect both permissioned and permissionless blockchains, as well as oracles, to work collectively under one umbrella. Polkadot is built around its relay chain, which ensures interoperability between other networked blockchains, or side chains. Notably, Polkadot is unique in that it not only hosts decentralized applications but also allows developers to design their own private blockchains while still benefiting from the base layer's security. The Cardano platform, on the other hand, is built on a novel technology that represents an advancement over the traditional POS mechanism utilized by the majority of scaling blockchains. In more detail, Cardano operates on the Ouroboros consensus protocol, a product of the research made by Cardano during their foundational phase. For those unfamiliar with this, the Ouroboros consensus protocol is the first POS to be informed with scholarly academic research and was created using a research-based approach that has proven to be a very secure alternative. Cardano is by far the most researched blockchain project to date, with over 90 publications on blockchain technology, covering a wide range of issues, authored by the Cardano development team. Impressively, the extensive research work carried out by the foundational team forms the backbone of the entire Cardano project. Scalability. One prominent issue that most new-generation blockchains seek to address is inherent in scalability, which refers to the ability of a blockchain to achieve high throughput and security, without compromising its decentralized attribute. Both Cardano and Polkadot are able to achieve scalability by employing a hybrid chaining system. Cardano, on one side of the coin, is able to achieve this by splitting its blockchain into two major layers, the Cardano Settlement Layer, CSL, OTC, XLI, and the Cardano Computational Layer, CCL. The former is used to record data, the network's native asset, transactions, while CCL contains smart contracts which can then be integrated by developers to stay active on the blockchain. Polkadot, on the other hand, also operates two types of blockchain, the relay chain, as discussed earlier, and another known as parachains, which are hosted on the mainnet with the help of smart contracts. While the relay chain is where the transactions made across the parachains are finalized, the parachains themselves are user-created on-chain networks, and are customized for various purposes. Sadly, the Cardano network is still unable to achieve as high levels of scalability as Polkadot, still registering a considerably low throughput of 20 to 250 transactions per second, TPS, whereas Polkadot is able to process at a rate as high as 1000 TPS by leveraging its parachain structure. Cardano, aware of its present setback, is working on an enhanced version 2 that is tentatively being called Hydra. According to Harold B., a project team member, the forthcoming upgrade will solve the major limitations, currently being faced, that may impede the network's adoption rate. The Hydra upgrade specifically aims to address the current low throughput by implementing a faster consensus mechanism. Furthermore, it will address several broad pressing concerns in the blockchain industry, such as parallelism and concurrency, Among others, token performance. The price of Cardano has increased tremendously in 2021. This comes in the wake of a 98% decrease from its all-time high of $1,345, recorded on January 3, 2018, which saw it fall over the latest 800 days to its lowest point of $0.018. From the 13th of March, 2020, a new impulsive move of the highest degree started developing, measuring to its all-time high of $3.18 on the 3rd of September this year. This marked an increase of 16,848%. On the other hand, Polkadot's native asset, DOT, started off in a narrow range last year, from August until December, hovering at around $5.18. This could be viewed as the accumulation stage, from which point we witnessed the beginnings of a bull cycle, starting from the 28th of December. An increase of 927% was then observed, as it came to rest at $49.74 on the 15th of May this year, which denoted an all-time high. The price went on to fall to $10.68 on the 20th of July, marking a decrease in value of 79%. That said, Cardano's ADA is performing relatively poorly for a token that was released 4 years earlier than its competitor. The best reasoning for such a low ADA token price, however, can be attributed to very few transactions on the Cardano blockchain. For example, while Cardano fully supports smart contract capabilities, some of the technology required for dApps, or web-based apps, is not available on the network. As a result, there are a large number of dApps awaiting launch on the network, while only a few applications currently function on the platform, making the low-priced utility token reasonable when measured against its time of arrival in the market. Polkadot, on the other hand, has made significant progress in the 2 years since its launch in May 2020. Currently, the blockchain network is home to over 350 projects built on Polkadot, with many more set to launch in the near future. Given the rate of spontaneous adoption, the price of DOT is projected to skyrocket even further. Ultimately, the sky's the limit for both Cardano and Polkadot, but whether they will be able to withstand the test of time is largely dependent on widespread acceptance within the industry. On the flip side, both Cardano and Polkadot are relatively new projects, and while they are constantly upgraded, adoption rates may vary depending on how quickly they can handle new barriers. General-purpose scaling blockchain networks like Cardano and Polkadot are intensely competitive, and although claiming to be a proprietary project, they do not provide genuine solutions. Why you should care? Because they are both relatively new projects, building applications or services on either Cardano or Polkadot. Genesis offers early access to long-term benefits such as corresponding utility token performance, compared to when they are completely matured. Email newsletter. Join to get the flip side of crypto. Upgrade your inbox and get our daily coin editors picks 1x a week delivered straight to your inbox. Contact Form 7. You can always unsubscribe with just one click. Continue reading on Daily Coin. Non-fungible token, NFT, investors have poured $7 million into a Dutch auction that sold 50 tokens conferring ownership over digital artworks that will not be minted until December. Tyler Hobbs, the artist behind the popular NFT series Fidenza, will launch 101 Okcoin digital artworks in his latest collection in complete control at the New York City-based Bright Moments Gallery from December 9 to December 13. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.